Our next guest is pretty bullish on retail value, upgrading TJX to buy, raising Ross price target following some store checks in July. Joining us here at Post 9 to break down her call is Loop Capital Managing Director Laura Champine. It's great to have you back, Laura. Welcome.
Thanks for having me, Carl.
What did you find in July for some of these checks?
So I could almost see in real time the supply chain healing, meaning brands are much better, and not just better than the last few years, but TJX is carrying the kind of trendy brands that I haven't seen there since way pre-COVID. Also, the closeouts are back, so the skincare brands are awesome. They've got a few. I saw a cool Schwinn bike in the front of a store from Armax, but also in the value brands too, the Rosses, the Burlingtons, they're selling price points $10 and even some cases lower than that of good brands, especially for back to school.
So that's why you argue TJX in particular has room to raise some price?
TJX is about the only one that has room to raise price, because whereas Ross and Burlington target a customer earning $50,000 or less, TJX at $75,000, around that area. So they'll promote price points at $40, whereas at Ross or Burlington, you'll see them tap out at $12 or $13.
Is it their gain, other retailers' loss? The fact that you're seeing trendier stuff at TJ Maxx, does that mean that the department stores and the specialty brands are hurting?
They have those brands too, but they just can't match the prices. And what I'm seeing that's key is in-season product. So this is not stuff that off-price is stored in warehouses. It will hurt, we think, department stores, which have been losing share to this group for 30 years. But it also has the potential to take a little bit out of mass, because the price points and the brands, if I can pay the same thing for my kids to have a Nike t-shirt as opposed to just a Walmart no label, why not do it?
One of the things in this Deloitte back-to-school report is the way in which the consumer doesn't have a great view of the labor market in the next 6 months, right?
That's right, which once again, you want to be at value retailers. So you want to be at retailers that sort of scream value. And all these guys have taken for granted in the past that people went there for value, but I'm seeing them advertise price points more in the front of the store.
I think it was also notable that you put in the research notes that you looked at the Barbie assortment. Is that really, do you think, a catalyst for sales?
I think it makes a difference, but it's also easy to check. So I'm checking the same exact SKUs from retailer to retailer. By the way, they all have some Barbies. TJX has more knockoffs, don't love that, but Ross has great and the lowest prices on Barbies, which it's a fun month to be checking that. If parents are there for back to school, why not pick up a Barbie for $5?
What about traffic in general at these places?
Traffic is good, which is a little bit surprising to me, because I do think there's a shift away from goods and towards services. So I think that points to off-price getting a bigger share of the wallet as opposed to the wallet growing.
We had been talking about, for example, Levi's is a great example, where they said, you know, our business to consumers who make more than $100K, for example, is holding in, but we can't get some of the wholesale pass through. What's happening there? Why do you think there's such a split?
It's interesting. Levi's in particular has tried to take their price points up and up and up, and I just don't see them in these off-price stores. And I see them at higher price points. I think they've tried to control their wholesale distribution too, which can hurt the presence of the brand and the growth of the brand.